What is going on, my friends, and welcome back, of course, to the Crypto Catch Up, your number one place to catch up on crypto. Now, in this live stream today, we are going to be anticipating and getting ready for the CPI report that is set to release in 20 minutes. Now, before then, what we're going to do, we're going to take a look at the broad market in general. We're going to take a look at what's going on with prices. We're going to take a look at what's going on with the charts, more of a fundamental perspective, our metrics, and then we're going to get ready for the CPI report, in which we're going to talk about expectations, what happened yesterday with the PPI report, and then by then we should, of course, see the Bureau of Labor Statistics release the CPI report, giving us a full idea of what in the world is going on in the market right now. And so in today's live stream, hopefully we can get all of this stuff covered. Let me make sure that everything looks good and sounds good. All righty, we are good to go. Now, guys, if there are at any given point technical difficulties, please just let me know. Leave a comment down in the live stream below. But while you are joining in, you can totally help me out by smashing that like button, of course, and subscribing if you are new here. But with that in mind, guys, let me go ahead and get this share screen set up, and we are going to get into today's live stream. Now, let's go ahead. What's up, John? Welcome in from Germany, my friend. Let's do this, shall we? Boom, there we go. Okay, so starting off here on Crypto Bubbles, let's get an idea of what in the world is going on in the market today. What we can see is that the last hour, people are doing actually pretty, they're doing some buying right now. They're doing some buying right now. Of course, we can see JASMY, Jupe, Sol, Aave, Rune, Crow, HNT, Render Bonk. A lot of these ones doing well. And of course, there's a couple ones that are negative right now, right? We have ZEC, we have Brett barely negative, we have AKT barely, Ordy barely. But realistically, I mean, holding up a ton, holding up quite well. And I mean, honestly pretty happy with the way in which we are seeing this hold up right now. So definitely a good sign. What I've come to recognize is that in more bullish times in the market, right, more macro bullish times, realistically, oftentimes you're going to see, red days following some sort of uncertainty, right? And that's the reason why yesterday we started to see a lot of people starting to sell and a lot of volatility picking up before the PPI report, because people really just didn't know, right? They just didn't know. And what I've come to realize is that in bullish times and bull markets, we're going to see a little bit of negativity before uncertainty, but not a ton. Maybe even a little bit of positivity before uncertainty. By uncertainty, I mean like a report, something releasing important information, etc. But in bear markets, things get way uglier, right? We see 5%, 10% falls before we get any data because people just assume something bad's going to happen. So it is nice that we are still within this more bullish market. It is nice that we are still within more of a bullish territory or time or whatever you want to call it, so that on days like today, when we do have a CPI report coming out, people aren't freaking out and selling everything. It definitely does come in handy. Now, as I mentioned before, from an hourly perspective, Aave the standout currently, but from a daily perspective, things are looking pretty damn good. Rune, Phantom, HNT, KASPA, Ton, Not, APT, all absolutely smashing it. 8 or 9% gains, 12% gains there for Ton. But seeing even our top 10 doing well, right? You can start to pay attention to even outside of the top 10, as we are finally starting to see some growth from things like KCS. We're seeing ZEC picked up there, OKB picked up there, APT, Render. I mean, overall doing well, and I would say a lot of this is a result of what we saw yesterday. Of course, you guys know that yesterday we saw the PPI inflation report, which basically just gives information on inflation, but from a producer perspective. And we actually saw that the monthly and the yearly came in better than expected. I think we were expecting 0.2% month over month and expecting, I think, 2.7% year over year. We got 0.1% month over month and 2.4% year over year, leading a lot of people to feel like, okay, we're finally maybe seeing this battle against inflation come towards an end. And that obviously may put us in a position in which we're, a little bit better off in the sense that we're, maybe interest rates start pulling back soon. Maybe we start to see an easing on the economy. Maybe all of this restrictive freaking quantitative tightening isn't going to continue, and then therefore that should open up doors of opportunity, especially from a liquidity perspective for, of course, the crypto market. Now, looking a little bit deeper at this thing, let's get a feel of what's going on just in the top 10 first, because we usually start with the top 10, but we started with the general market today. But what we can see, a good day, a good day. 24 hours, Bitcoin up 3.8%, leading the charge, but Ethereum not too far behind it at 3.4%. We're seeing things like BNB, Solana, XRP not doing the best, honestly, which is interesting. These ones definitely aren't crushing it like they usually do, but that does just kind of tell me that, look, we're still in a Bitcoin season. We're still in a macro season. People are focused on the bigger coins. They're kind of still in the more safety zone. And we kind of knew that, right? If we do go out to the altcoin season index, we've been paying attention to the fact that right now, Bitcoin and Ethereum specifically are going to continue to lead the charge, but Bitcoin more than the rest, right? We're at a 22 out of a scale of 100, 0 being Bitcoin season, 100 being altcoin season. And so, of course, in moments like this, where there is a little uncertainty, people they're not necessarily knowing what's going to happen. Of course, they're going to go in the direction of Bitcoin. That's just what happens, right? And so seeing Bitcoin leading the charge at nearly 4% over the last 24 hours isn't totally surprising. Now, I will say we have ton coming in. This thing is going nuts, guys. $18 billion market cap currently. Looking at the month, it is recovering extremely well. Looking at all time, this thing is doing absolutely phenomenal. And it is one where it's like, I wish, I saw it back in 2023, but I was like, yeah, it's okay. Like, I wasn't that interested, and now that I'm seeing it gain the momentum that is gaining, I feel like I made a mistake there. But obviously, there will be days of opportunity that come to kind of add this to the bag. I don't hold any of this actually, so could be interesting. It could be something to pay very close attention to, because it does seem as if it is that one that is probably going to be a top 15 and maintain it, maybe even maintain its top 10 spot this market. So definitely an interesting play there. Definitely something that feel like I should have gotten in on it, because I noticed and recognized how influential the world of Telegram is on the world of crypto, but I just didn't quite go for it. I just didn't quite go for it. And it just is what it is at the end of the day. Oh, and it looks like we may have lost the camera. There we go. Okay, we got it back. So, interesting play there. But anywho, so yeah, that's kind of what's going on in the market today. After yesterday's PPI report, we are seeing the crypto market holding up quite well. Bitcoin leading the charge, bringing a lot of our altcoins up with it. But we, again, even outside the top 10, we are seeing a lot of growth. Ton, Rune, Phantom, H&T, Aave, FET, Strike, STX, BSV, etc. So looking good. Now, let's dive into this thing from a little bit more of a fundamental perspective. Let's get an idea of what these charts are looking like. Let's get an idea of what these metrics are looking like, because I think that this is just as important as anything else. Having an understanding of what's fundamentally happening on chain is so important. So let's do that. Okay, so you guys know we always like to start off here with the Crypto Fear and Greed Index. And guys, don't forget, we are just kind of cooking right now. We're building up, getting an idea of what's happening in this market prior to the CPI report. And of course, we will go over that in exactly 13 minutes. So if you are new here, subscribe. Shout out to you, Tim, for liking and subscribing. You're the homie. Now, Crypto Fear and Greed Index currently sitting at a 30 reading. Not too bad. We spent a lot of days in fear this week, guys. A lot of days in fear. 5 days in fear, 1 day in extreme fear, 1 day neutral in the last 7 days. So it's crazy. And, people who maybe even remotely new here might say like, well, that's kind of normal, right? You buy when people are fearful. It's not really that normal. If we look at the last year, we've only spent 30 days in fear and 2 days in extreme greed. And of these 30 days, we spent 7 of those 30 days just within the last 2 weeks here, right? So in the last 365 days, guys, prior to a week, let's call it 10 days ago, we had only spent 20 days. 20 days. In the fear zone. We have spent no days in extreme fear in the last year. And when we're talking about a year, you got to think about how far we're talking about back, guys. We're talking about right here. I believe. No. A little bit further. Look, let me just do it like this. If we're talking about Bitcoin, because this is so much easier. Look, watch this. We're talking about since back here, right? So we were at $26,000. And we had spent no days in extreme fear and only 20 days in fear throughout this entire move to the upside. And even throughout this entire pullback, we just started seeing a good bit of fear and extreme fear popping up. And so that's what I'm saying. This is still an unusual moment. This still isn't a time in which, it's just not common that we're sitting in fear. It's something to pay attention to, because although the price isn't moving that far down, right, we're still rather stable around this general zone. Look at the difference now. You see this gap? This gap is when we're seeing the Crypto Fear and Greed Index drop. This gap and this gap. And we're seeing it so much more than we've seen over the last year. It's insane. Absolutely insane. And that's what I'm saying. You got to watch it. You got to pay close attention to it. And yeah, this is the last year right here. So you can see, we had a little drop there during this pullback. We had a little drop here during this pullback in which the Crypto Fear and Greed Index fell into neutral zone. But realistically, the first time we even hit fear was back here, guys. I mean, in June, we've spent all of the time of fear and extreme fear in the last year since June. And that's what I keep asking you guys. And, correct me if I'm wrong. I don't think where we're at right now is all that scary. I would say where we've been, over the last few weeks is definitely not fun, but I wouldn't say it's worthy of extreme fear. Yeah, sure. There's a world recession that everybody's nervous about. And I get that. And I'm not discounting that. But what I would be willing to say is that, look, anybody who knows anything, anybody who's been around, anybody who's just been living has been struggling for years. So just because they want to put a label on it, even though they've moved the goalpost 40 times in the last 2 years, you want to put a label on it now saying that we're in a recession, go ahead. But at the end of the day, not many people, it'd be hard to convince me that a lot of people, millions of people are living way worse right now than they were a year ago. It just doesn't seem realistic to me. Now, correct me if I'm wrong. I may only be speaking from my own perspective. Maybe let me know down in the live stream chat. Is life easier or harder for you? Or is it just the same? right? Convincing me that it's getting that much worse is hard to convince me, right? Now there are certain events that are happening across the world right now that are definitely not good. I'm not saying those aren't happening, but I'm talking about from an economic perspective. The world's not that much worse off right now. So just because you call it a recession now doesn't mean anything's actually changing. I would say the biggest difference is, of course, that we are starting to see earnings drops. We are starting to see the effects of inflation or interest rates, sorry, which obviously is causing some of these major companies to, let people off or let people go. So, of course, yeah, you have to think there will be tens of thousands of people who are going to be without jobs. So that could cause a strain. But at the end of the day, that's not the world. You know what I mean? That's not going to be everyone involved. And so, because of that, us going into extreme fear as a result of that is a little bit unrealistic in my opinion. Sorry for the rant. I don't think it makes a lot of sense because when you look at all time, we've only spent 12% of the time, 12% of the time in extreme fear. And those were in crazy bad moments. We're talking April of 2020. Guys, we're talking November of 2018 when the real estate market started getting weird. Guys, we're talking when FTX crashed in 2022. We're talking about those times. Is this really the same? I don't think so. So because of that, the fact that we're in fear right now, I still think we're in a buying opportunity. I think the buying opportunity is not as good, right? I think at 62K is clearly not as good as 49,000. It's not as good as it was back here, but still here with all this room to grow is still a pretty good time. Now, let's talk about the general direction that the market's looking to go in, okay? From a short-term, mid-term, macro-term time frame. So what I will say is that it does feel to me like we are on the verge of this market pulling back. Okay, it does feel like we could be on the verge of this market pulling back. And by this market, let's talk about Bitcoin specifically because Bitcoin is leading the charge still. Okay, here we go. Now, it just depends, right? It just depends. And there's an interesting thing happening right now. And I want to pair my fundamental and my technical analysis together so you can see this. Okay. So, what's happening right now is Bitcoin is currently, let me just get rid of you, get rid of you, get rid of you. Bitcoin is currently putting in what many people call a cup and handle pattern. Okay. Now, a cup and handle pattern is extremely bullish if executed on. Now, in order for Bitcoin to execute on this cup and handle pattern, what's going to need to happen is it's going to need to be able to break above $62,000 and maintain it. The issue is that this is the 618 to 786 Fibonacci zone, which is the zone that is the most likely to reject Bitcoin's price back to the downside. And so what we're at right now is we're at a crossroads. Is Bitcoin going to capture this level, start to work its way up and execute on this cup and handle pattern? Because if so, it easily can push back up towards some of these higher levels, the higher $65,000 to $70,000 level. It easily can do that. Maybe not immediately, obviously, but over time, that's the direction it goes in. But if it fails here and it gets rejected and starts to invalidate this bullish structure, that's very bearish. And then we could see its price pull back towards $55,000. And interestingly enough, what we're seeing from a more daily perspective is the fact that we are seeing people who are betting too big right now. It's the easiest way to say it. They're betting too big that Bitcoin is going to be able to cross this threshold and that the CPI data is going to push its price upwards. And the way you can tell that is because more liquidations will happen today if the price falls than if it pumps. Now, that's not to guarantee that that's what's going to happen. And if we do look at the 30-day, right, there are still way more liquidations that will happen if we move upwards. But sometimes what happens is that in the short term, we'll get pullbacks before more macro pumps happen. And what that looks like is Bitcoin doing something like this. Its price comes here, boom, breaks back towards the downside. Then it goes back towards the upside, and then we clear upwards. Because what happens in this situation is that those longs get liquidated. So all of these people on the daily who will get liquidated if its price goes down to say $57,000, they get liquidated, and then bam, then we rip to the upside, and then all of these more macro shorts get liquidated because the price pushes up through these liquidation levels, knocking them all out of their trades. And so what I would actually say is that right now, I wouldn't be making any bets. I actually wouldn't even be trying to leverage long or short this thing currently because there is a major risk that some type of move of that nature does happen. And if you're not super prepared for how to handle that, if you're unsure how to handle that, that's probably not the best time. And the issue is that if you prepare for that, you're likely not going to be able to capitalize on the move if it just goes upwards. If it doesn't make this move and it just goes upwards, you're likely not going to be able to capitalize on this that much because you were preparing for this possible downside risk. And so knowing currently that there is such a minimal risk to somewhat high reward ratio here, knowing that we have macro resistance and the market is seemingly putting us in a spot where we could get a pullback here, I just don't particularly think this is the best time to be accumulating or, like going long on leverage or short on leverage or anything like that. I'm not betting on leverage at all right now. I'm just letting the structure play out because things are unclear and people are uncertain and no one truly knows because this market is people are betting on the look how crazy this is. People are betting on the daily time frames that we're going to push upwards, right? That we're going to see the market go up, but we're still seeing the crypto fear and greed index, which I'm not going to go all the way back down to it, but the crypto fear and greed index is pointing at fear still and low side fear. Like people are fearful right now, but people are betting it's going to go up. That's how uncertain the market is. And so because of all of these things, I think currently speaking, now is a risky time to be going leverage on longs and or shorts. And I'm personally not doing that. Now, getting an idea, so removing the idea of leverage trading out because I just don't think it's a good idea right now. Let's see what's happening from more of just a dollar cost average perspective. Is now a time to just be dollar cost averaging in? Maybe we're not going leverage long, leverage short. Maybe we're just wanting to add to our bags. Let's see. On the weekly charts. Currently speaking, we're sitting at an average RSI of 42. So generally speaking, this isn't the best time to be dollar cost averaging. There are definitely way better times on average, but it's not a terrible time. Anything under 50 is an okay time. Anything in the weak zone is a good time. Anything in the oversold time is a great time. And so we're in an okay time right now. So if you just feel the need, feel the urge to be doing some dollar cost averaging, now is an okay time. Maybe not particularly for ton, maybe not for XRP and Aave or even Bitcoin, right? But some of your other ones, your ETHs, your Litecoins, your Unis, TRBs, your ARBs, DOTs, right? These ones who are sitting in the weak zone, yeah, sure, maybe it may be a decent time. Now, from that perspective, right? Let's not even go into this right now. Let's stay on the RSI heat map. From that perspective, if we do look at more of the, the shorter term time frames, what you can see is that your 4-hour RSI is actually sitting closer, and most of your cryptos are sitting in this a little bit too overbought zone, right? Not the worst time, still again a decent time to be buying, but we're getting really close to overbought, which is the strong zone, or almost overbought. So you have neutral, almost overbought. And what you can see is that on the shorter term time frames, we are seeing this average RSI above neutral, and that typically just says that if you are going to dollar cost average right now, if you are going to be getting in right now, going in big is either a bad idea, like you shouldn't do it, or if you go in big, you need to accept that in the short term, we might pull back. We might see this market kind of capitulate a little bit before we do see some type of growth. Now, looking at the 12-hour, okay, as we get a little bit bigger, yeah, our average RSI is nearly break even on the neutral. And so because of that, that says typically like, okay, this is just a time. It's not a time to sell. It's not a time to buy. It's just kind of a sit back and wait time. And then looking at the 24 hours, it's very similar, a little bit under neutral. So again, a decent time to buy. But what this is pointing to you is that in the short term, not the best opportunity to be buying. In the midterm, it's like a holding opportunity. Like if you're looking at it, next week, 3 weeks, couple months, it's like a mid purchasing time. But if you're looking at this from a macro perspective, right? If we're looking at this from a weekly perspective, if we're seeing what's happening there, then it's a decent time to buy. So not a great time to buy across anywhere right now, but a decent time to buy if you're looking to just buy and leave it alone for months and months and months. And that's typically and that's generally what we are seeing, right? Because again, take what we just learned with the RSI heat map and let's go back to the liquidation map, okay? Let's go back over here. Remember, in the short term, there's a lot of crazy shit that's about to happen. Liquidations to the bottom side and liquidations to the top side. But in the macro, on the 30-day, a lot more liquidations to the upside, meaning that the market should generally be able to move upwards over the longer period of time. And so that's exactly why when you pair this with the RSI heat map, you can get a visual that says, okay, in the short term, things might get weird. They might get ugly. Probably not the best time to buy. But in the long term, we should see this thing push upwards. So it could be a decent time to buy. Okay. And so that's where we are at the market right now. Let's go ahead and let's jump over to the Bureau of Labor Statistics. Bureau of Statistics should pop it up because we have the CPI report releasing in 1 minute. Let's see what's going on. Okay. So let me go ahead. Let me get this pulled up. Let me get expectations up real quick. CPI data expectations. Alrighty. Let's see. So expectations were economists expect annual price rise to clock in at 3%, matching June's rate, while core inflation is expected to moderate or fall slightly. Okay. Alrighty. So 3% is what people are expecting. Let's see what we got. 23 hours ago, nothing yet. Just keep on refreshing. Let's see what we got. Should be coming out any minute now. And it should be at 7:30 Eastern Standard. If not, well, I guess we're in a bad spot here. Dude. What are you guys expecting? How are you feeling? Oh, also, guys, again, if you find the info valuable, if you like the catch up, let me know. The whole purpose, while I'm waiting for this to load, the whole purpose of this channel is to give you the ability to catch up on crypto, have a good understanding of what's happening from a broad perspective and where we are in the market. That's the whole purpose of this entire channel. Do you guys feel like I'm accomplishing that, not only with these live streams, with these videos? Let me know down in the live chat and let me know down in the comments. Let me know if I'm accomplishing that goal. And if not, let me know what I could do better. One thing I am going to do better is I'm going to start to feature altcoins a little bit more because we're doing a ton about the broad market or just Bitcoin specifically in the broad market, but we've not gone into, say, some of the smaller altcoin news and stuff. And I think having a good understanding of what's happening in the altcoin market is important. So I will be adding that starting soon. But let me know from an overall perspective. Let me know if you are getting the info that you need. Okay. Let me know if you're getting the info that you need. Here we go. CPI for all items rises 0.2% in July. Shelter up. Oh, buddy. All right, let's see what we got. Increased 2.2% on a seasonally adjusted basis after declining 0.1% in June. The U.S. Bureau of Labor Statistics reported today. Over the last 12 months, the all items index increased 2.9% before your seasonal adjustment. Now, I believe, Sam, I know Sam's in the chat. What's up, my boy? I know you're in the chat. Sam, I believe the expectation was 3%, right? Off of what we just looked at. Tell me if I'm wrong, but this should mean that we did come in a little lighter than expected, which is a good thing, sitting at 2.9% here. Now, get a bit of an idea of what's going on. All items, 2.9%. You unadjusted 12 months into July 2024. Honestly, not bad. Now, things definitely did tick up a little bit, especially in comparison to the last few months, right? We had May at 0.0. We had June at minus 0.01. Minus 0.1. There we go. But we picked up a little bit in at a 0.2, but overall not terrible, right? January was 0.3, Feb 0.4, March 0.4, April 0.3. So just because things did slow down a little bit in May and June, it is good to see that even though in July, when things are ticking up a little bit, we're still beating expectations and we are still seeing overall not as much growth as we did see back here. Now, let's see a couple things. What is ticking up? Because something feels like this one. Okay, so fuel definitely ticked up a good bit. Not as much, again, as we saw back in, say, February, for example, and about the same as April, but definitely a pretty significant jump, right? But fuel is so volatile. Fuel oil specifically is so volatile because we went from negative 4.5 to 1.1 in February. We went from negative 1.3 in March to 0.9 the next month. And so it's not particularly that surprising to see this thing jump up the way in which it is. And we are still negative on a year-over-year perspective, but it definitely is still holding up, and the volatility is still pretty high. And I think, fuel oil and gasoline and all these things are really what's impacting the modern day person a lot. And so obviously it is something to consider. Now, all items less food and energy, both of which are extremely volatile. We can see current unadjusted 12 months is currently sitting at a 3.2, which isn't terrible. It's not that great, You look in this perspective, say January 0.4, 0.4, 0.4, then we started making progress, 0.3, 0.2, 0.1. But then when you start to tick up a little bit more, it's like, we want to see these numbers consistently falling. And yeah, sure, over the grand scheme of things, they aren't doing bad, right? The goal here is 2% from a macro perspective. We're just not getting there yet. And it's kind of interesting because I wonder, how does this impact the Fed? What do they think? What are they going to say? Are they going to say, well, we're not there yet and it's not falling enough, so we're going to continue to drop, continue to hold interest rates where they are right now? Or are they going to take a look at the macro economy, not want a recession to take place, and then start to just allow this to be the new norm? You don't really know. And that's what's truly interesting. But at the end of the day, where we are right now isn't terrible. It's definitely not a threat, in my opinion. I would say 2.9% unadjusted year over year and a 3.2 less food and energy. That's not bad, right? We're in a decent spot in the economy right now, and it's much better than we've been seeing historically. So it's not something to cause worry or fear, but it definitely is interesting to see that we're struggling to get over this last curve or this last hump, whatever you want to call it. Now, looking at the market to get a feel for how the market's responding, nothing too crazy is actually happening. On the minute, we actually did see a bit of a pullback. On the minute, we did see a bit of a pullback. Honestly, don't know why. This is the type of volatility I'm talking about. The fact that within 1 minute, we saw Bitcoin's price fall 1.5% is very crazy. This is the type of stuff that is going to start causing liquidations. But overall, the market doesn't particularly seem to care about this. Yes, we came in a little bit better than expected, but not a ton better than expected or worse than expected. So what the market was pricing in and the expectations that were being priced in were basically met to some degree. And so because of that, we're probably just going to see this thing kind of meditate a little bit. I wouldn't expect too too much, but obviously there are those risks that we talked about earlier. And so it surely is interesting. This market's honestly been in a weird spot, and I'm kind of surprised at where we are right now. But of course, that's just that. Now, looking at this, let me see if they released the I like when they released like this little graphic. I wish they had it released. Let me see if I can find it here. Let's see. Let's see what people are saying about this CPI report. We're going to do this for 5 more minutes. And now that we've kind of gone over the market for the day, talked about where we're at, talked about the fact that this is not a great buying opportunity on any time frame, a decent buying opportunity long term, mid opportunity on the short term. Now that we've kind of covered that and we know what happened with this here CPI report, of course, we're going to go ahead and wrap this up in about 5 minutes, go through, just check on some more Twitter stuff, see what's happening with the news here, and then we'll get going. So guys, if you do have any questions, let us know down in the chat. And again, if you are new here, subscribe to the channel, baby, if you do enjoy the content. So, inflation report, August 2024. Core inflation expected at 3.3 came in at 3.2. Remember, that's just this isn't it. I might have exited out of it. It's okay. It's this. All items less food and energy. That gives you your core. Okay. Else was that? Inflation was expected at 3%. Inflation's actual was 2.9%. CPI expected 314.6. CPI actual 314.54. So on all accounts, we actually came in and just did a little bit better than analysts were expecting. And so, yeah, not too bad. Not something that I would be all too excited about. Not something I'd be all too worried about. Just pretty basic day for the day. So hopefully no extreme volatility does enter the market as a result of this, because again, we're at a rather big risk right now of a ton of liquidation starting to happen, especially just knowing what's happening from more of a back end perspective. And so hopefully we do see this market remain somewhat stable. Let this thing kind of cook up a little bit. Let us continue to push forward. Let these interest rates hopefully start to fall, get whatever volatility comes from that over with, push towards November, December, where we will see the presidential elections, where I do think that we could very well start to see altcoins really start to catch momentum towards the end of the year, beginning of next year. So overall, of course, not a terrible day, not a terrible morning, rather basic and rather neutral, I would say. But it is always good to just get an idea of where this market's at right now. And so I hope it was helpful. I hope it was valuable just to kind of go over the reports live together. Not only that, though, but just to kind of give you more of a perspective of what's happening from a broad perspective. Okay, is it a good time to buy or not? That's what we will continue to do here on the Crypto Catch Up, your number one place to catch up on crypto. So, of course, if you guys have been enjoying this, again, all I ask, just drop a like on this so more people see it. Subscribe if you are new. And guys, I can't wait to see you all in the next one. Peace out, everybody.